I would like to welcome everyone. My name is Michael Varshavsky. I'm the founder and CEO of Confidence Wealth Management Partners. After a 30-year career in private banking and wealth management internationally, I started an advisory business and I help family offices to establish, let's say, their virtual family office and their multi-generational wealth management plans.
Hello, hi. This is Veronica from Singapore. I'm the founder and CEO of Envision Wealth Management. We are a new multi-family office set up by many professional wealth managers who has the vision of building the next era of wealth management solutions platform that is centered only on current needs and requirements in Asia.
So my name is Georgie Benardete. I'm the founder and CEO of Align 17. Align 17 is a global impact investing marketplace that was spun out of the community of the young global leaders of the World Economic Forum and incubated by UBS Private Wealth in Zurich. The goal of Align 17 is effectively to connect the world of private wealth, so think about family offices and multi-family offices, with the exciting impact investing opportunities of the future. I work mostly with impact funds, co-investments with funds, because this is an area that family offices really know how to invest from a structure perspective and are keen to connect because it's complementary to what the large private banks bring to the table.
Hi, everybody. Ibrahim AlHusseini, managing partner, FullCycle Climate Partners. And I wasn't a government, I wasn't an NGO, I was an investor and entrepreneur, so I decided to put that talents to work to address climate change from the private sector, and now I manage climate funds under the brand FullCycle.
I'm Steve Singer, and I'm a lifestyle advisor with GrowCo. We are a CPA firm located in Silicon Valley that assists our high net worth families and entrepreneurs to achieve their lifestyles and financial goals. Our families range from $50 million to $6 billion in net worth. Currently, I sit on a couple boards that come up with solutions for diabetes and childhood hunger. I also assist young entrepreneurs in developing their entrepreneurship skills. And I also promote women on boards and women investing. And also sit on the Altru Institute, and they tackle global humanitarian challenges.
Steve, what are you seeing with the families you work with? Are they emerging stronger from the pandemic?
It depends. It depends what the family office was investing in. A lot of our family offices had commercial real estate, and so they're doing a reset on terms of what they're going to do with their commercial real estate, because if there was a lot of vacancies and the whole bit that was going on with that. And then the other ones, we have technology and pharma. Those were doing very well, and they were kind of looking at how to establish more wealth in those particular areas, and getting funding during this time too. That was kind of going on too. The other side was the personal side on the families themselves. We saw that because of the pandemic, they had to spend a lot of more time with their families. That was very stressful for the entire family. And so some of them came out pretty well, and they became stronger in that. Other ones, they were having some difficulties on the interfamiliar relationships. And so that's some of the things in which, we're trying to work on with their lifestyle to make sure that they connect better as they go through these cycles.
Georgie, how are your families adapting, if at all, to the change in the U.S. administration?
Yes. So because the families that I work with are specifically wanting to, do impact investing effectively, so the reaction was a collective exhale, right? Is now, welcoming the U.S. back into the Paris Agreement, understanding that there's going to be major investments in green infrastructure. So knowing that even when they're not invested in the U.S., the market will move, closer to impact and sustainability, whereas in the past there was a feeling that the U.S. was not just lagging behind, because it is, but it's proactively going against, right? So from an impact investing family offices, that collective exhale. The Germans were very scared until December, until the other day. They were extremely scared that the political kind of volatility was going to work against, that future. So that's very positive. I think one thing that happened that the transition had, again, liberated is looking into the U.S. as a potential place to invest on the impact investing side of the equation. Most of the European families prefer to invest in funds that are domiciled in Europe. They're open to Asia, some specific country in Asia, particularly Japan when it comes to renewable energy. And there were also, the previous administration had made it a little bit harder for foreign investors to invest in U.S. private equity impact funds. So again, collective exhale when it comes to impact investing. Looking at the U.S. As a potential for impact investing funds to invest in, and welcoming obviously the U.S. to the table when it comes to impact investing. So there's a collective exhale, I would say, from that specific universe and theme.
Steve, what are you seeing in terms of your clients' adaptations to the new administration?
From a U.S. standpoint, on my families that are located around the U.S., I see a split. I see that the more conservative ones are actually very angry about the administration and how it's going. And so their focus is on how to kind of combat whatever the administration is. On the other side, on some of the more coastal U.S. Families, that they are encouraged by what's kind of going on. That's what I'm seeing. They're excited that there's a lot of liquidity in the market, and at the same time, even though they say about inflation and everything else, because it's going to keep the interest rates down, there's more capital to kind of come into play. Their investment strategies that I see really haven't changed. They're investing in artificial intelligence. Now that they're looking at what coming out of post-COVID, they're really looking at ed tech because they know that has to kind of come into play. Pharma, big data, and now what I'm seeing is that besides the cryptocurrencies, they're also looking at digital asset collecting because that's the next big thing that they're kind of seeing and how they can position themselves in terms of how they're investing. Others that I see are looking at to buy some sports teams still. They were doing it before the pandemic, and they're saying now because the audience is down that maybe they can get some deals. And then finally, I'm seeing some of the family offices setting up some SPACs. That's what I'm also seeing.
Ibrahim, what are you seeing in terms of impact? You're in the middle of it.
Yeah, I've seen massive yield. The green power stocks the last decade returned 426%, which is 7 times more than the global portfolio of polluting energy stocks. But even beyond that, one of the things that I notice is it's a nascent enough space, and people don't have a nuanced understanding of it. It's just like it's a very haphazard approach. The industry is not prioritizing. We actually have foundational issues that when you're trying to fix a problem that is reliant on something else actually remaining in place, you're making an assumption that it's going to remain in place, and that's a false assumption in many cases. So I see people investing in things like, if we look at it as a building, they're investing in things where they're furnishing the 13th floor while the foundation is cracking. It doesn't really matter what you do to the 13th floor if the foundation is going to fall apart. So there's just a general, this idea when we need to transition from, which is, hey, what is your passion, or what area are you particularly interested in? It sounds like this is kind of how we coddle the wealthy by holding their hand and being like, hey, as if this is some sort of hobby. What do you want to do? What do you want to invest in, as opposed to actually educating them so they understand, if we're going to direct our capital towards solving real problems, it has to be in a strategized, prioritized fashion, not in this haphazard shotgun approach that makes people feel like they're making a difference compared to actually making a difference. And all of that doesn't have to be done in any sort of compromised, returned standpoint. I've done fantastically well, and as Steven said, we have more SPACs knocking on our doors to take our companies public than we have companies. So everybody knows that the next 30 years are going to have secular tailwinds around, all the areas that my colleagues here mentioned. So it's the future. But what I would like to offer additionally is we need to do a better job in educating all the asset holders in the world, where the priorities are. It can't just be, hey, we're going to fix fishing practices in this amazing Guatemalan village to more sustainable fishing practices when all marine life is going to collapse. Mm-hmm. So, because who cares how sustainable fishing practices if there's nothing.
Right.
So, so anyway, that's just what I wanted to offer. Like we need more education. We need more nuance. We need less coddling and hand holding and to wealth owners. The responsibility now of having wealth has never been more important.
Farhan, let me turn it over to you.
Okay. In Asia, a lot of family office here, they are now transferring their management from first gen to the second or even third. So sustainability and impact investing is actually now almost mainstream. These younger generations are definitely more exposed and conscious about impact of sustainable investment. So besides ESG or impact investment, we can also see more interest in like private equity, especially in the area of tech and healthcare recently, which I believe was driven by the pandemic. I believe the growth of family offices concept in Asia too will continue to drive the above investment strategies. The measurements of family office success in investment will no longer be restricted to percentage gain of the portfolio, but also on the impact created. So for us and Vision's view, our vision is really growing an ecosystem for family offices. Basically, we are creating a common exchange on idea and investment strategies, which we pool the family offices together to form co-investment or cooperative efforts in creating impact in our investment strategies here.
Fantastic. Thank you very much. And Georgie, this is your area. What are you seeing your families doing in terms of making real change?
Well, it's for everybody, right? So one way to see for me impact, right? This is not a choice, or it is a choice. So the choice really is, are we ready to have a world that is healthy, wealthy, and thriving for all species, not just humans, right? And whether you care or not about climate change and biodiversity and impact, it's also a secular story, right? So if you look at the commitments for green initiatives between the US, the EU, and China already committed, this comes to $4.1 trillion. Again, you don't even need to care about the things. It becomes an investment decision. If you put them all together, it's even more combined than any of the largest infrastructure projects ever in the history of the world, including the Great Wall of China, the Panama Canal. So this is happening, right? There's a confluence of elements that have to do with technological innovation, with low cost of capital, geopolitical rivalry, right? So, so this is happening no matter what. Now, the good news is that if on top of that, you really care about it, this is the most exciting opportunity of the generation. Next is get it. The way I see it is there's three major buckets where if you've already committed to this theme, you should be looking into. Obviously, you have the world of climate change, and within all things tech, you have ag tech, food tech, waste tech, and textile tech, which combined, they would become the third largest economy in the world, which is amazing. On the other side, you have biodiversity, essential and very important for families who understand the notion of conservation and long-term planning. And for that, there are incredible new ways to have blended capital come to the table in support of reforestation and conservation and all sorts of biodiversity, including obviously life underwater. And then you have the fascinating world of mental health. We cannot have a world that looks healthy when we are not healthy ourselves. There's around 250 million people in the world with depression, and COVID has exacerbated. My son my young son had huge emotional issues under COVID, and we all have been touched one way or another. And then the good news is that there are new investments in the world of psychedelics and FDA-approved treatments already on ketamine-assisted therapy that are going to really unleash that inside-out transformation, so we can finally live in a world that reflects, inner peace and inner balance. And so the next generation gets it. They were born under sustainability. They care about these issues. They're going to suffer the brunt of these three topics, and they're ready to make the decision. You ask me who's ahead, I would say the European and Asian communities are ahead. And I can go into that as to why, but there's a structural, pressure in the U.S. to divide ourselves between for-profit and care that we need to transcend. And we have a lot to learn from our Asian counterparties and European counterparties who have been here way before we have.
Fantastic. Would love to follow up on that during the Q&A session, Georgie. It's very interesting.
The key to me is whether or not they really know how to do the due diligence. This is where the issue is that I see with our families, is being able to do the due diligence on the impact investing. I think that the family office, in terms of impact investing, is one category to do it, but I think they need to look at a broader perspective on impact investing. So, for example, I'm working with women, how women invest, and they're trying to pull together about $10 billion that they can deploy over the next couple of years into women-owned businesses, just because of the pandemic and what's happened to them. And so I think the players that have to be pressured on are the pension funds, the venture capital, and the private equity, where you have the secondary, the second generation coming up and demanding that they look at these impact investing, not just from the returns. And then also we're seeing some action in terms of trying to change some of the governance issues on some of the boards. And then the other thing is just to really how to measure these things, because I don't think that there's clear measurements. Like I think Ibrahim was saying, is we're looking at passion kind of investing, and he was giving the example about fishing. So really, how do you do it on a global basis, or even in the U.S., and how do you measure those particular elements? That's what we're seeing.
Thank you very much, Steve. Would one of our audience members like to ask a question, either by using the comment box on the bottom right of the screen or by grabbing the mic? I will throw out the first question. Georgie, you mentioned that Europe and Asia have an advantage in terms of making an impact. Can you please elaborate on that?
Yeah, it's not in making an impact, it's in their experience having been invested already in these things without needing to sacrifice returns, right? If you think about it, going back to the US, this notion of you make it and then you donate, right? The Danes have had for the past 200 years a model, a regulated model in terms of how they incorporate their businesses, where the notion of what they can invest on or what they cannot invest on it's not as delineated into for profit, for impact, right? And so they have a long tradition of investing in things that we can consider to be impact investing and asking for a return, right? So there's no that kind of mental and legal and structural division between what's positive financially and what's positive for an impact metric that they're seeking. Also, if you look at the ESG funds that I alluded to before, that increase of 80%, 88% of them actually are EU domiciled. So it also has to do with the fact that there's many, many more managers and funds outside of the US, numeratively speaking. So they have had access to these, way in the past. Also, last but not least, the European banks, the large private wealth banks, the larger ones, are based in Europe and they're outside of the US, right, from an AUM perspective. So they have already been listening to where the trend is going, where the clients are asking, and they've already made commitments way before the US banks did. So it's an alignment of people don't see this different, investors don't see the difference between, philanthropy and making money. So they can, welcome different themes. the banks have set up commitments that have brought more product to the table. So it's that combination and convergence. And actually, the last point to Stephen's points, the Europeans right now, the EU just, launched a new sustainability regulation, extremely harsh, precisely to make sure that people now have the framework and the nomenclature to understand which funds are light green, medium green, and high green. And so that gives you a sense from a regulatory perspective of why Europe is being more of the experimentation, breeding ground, and then investment that makes it, again, an example that we can learn a lot from.
Fantastic. Would anyone like to add to that comment?
I wanted to bring up something that we haven't addressed on family offices, which is actually how much money they have available in their family foundations. It's really a really huge amount of money that I see on our family foundations. And I think this is another way for social development goals and impact investing that they can make a difference, especially on the next generations for developing the programs. If they want to do that and have a operating foundation to kind of to discuss and do some of these goals.
Yes, absolutely.
Makes a lot of sense. Thank you. And Steve, you also mentioned crypto assets. Do you want to say a word about that? That there is obviously a lot going on in that space.
Yeah, actually, I'm coming out with a 6-page article on cryptocurrency in the U.S. and stuff like that. But it's kind of like the Wild West, because in terms of the taxation policy that we're seeing right now, it's property, but I think that there's a lot of assets that are kind of coming into play, like stable coins. We have a lot of clients that are buying and holding their cryptocurrency. It's what they do, and then trying to transfer the upside value to the next generation on it. And it's becoming more adopted in the U.S. and around the world on getting payments in some form or another. So I think that the family offices have to kind of get a handle, forget about investing in it, of what this means to them on terms of the e-commerce that's going to happen as a result of this.
Are they holding or hodling?
Well, I would holding. I kind of say that they're some of the family offices that I see or on some of the TVs and propping up the pricing and things like that I see. They're holding, right? I mean, because to me, when they're buying in, it's such a small percentage of their portfolio when they bought in. Now it's a huge percentage it's a larger percentage of the portfolio, and they keep on wanting it to rise, right? So I think that that's another element that's kind of happening on this stuff. So I've talked to two family offices that have it, and one of them I said there was a deal that I was looking at, and I said, well, why don't you try to monetize this thing without selling your crypto? And he says, no, I don't want to do it. It's all virgin. And he's been investing since 2009. Okay, so that's kind of so you can imagine how much value they has there. So,
thank you, Varun. What is the discussion between families about crypto assets in Asia?
Is getting more popular, but we are also talking a lot about digitizing assets. So how to actually tokenize, certain assets that is not possible in the past. For example, like art, buildings, things like that. So I think we are still very much concerned about crypto being something that do not have real assets behind. Still, it's pretty conservative here, especially in the private wealth, in the banking industry, especially. But I think the recent run up of all these cryptocurrencies has changed a lot of people's minds of at least having some in their portfolio, being whether they just keep it for the long term, hoping that the value will go higher, but to actually using it or actually allocating a lot of the assets in this space. I do see 1 or 2 family who are having maybe the second gen, they are really into this, or they are even in the industry. But other than that, most of the family offices are pretty traditional. They still prefer to just keep a small portion, just in case it goes up. Yeah.
Fantastic. Well, this has been a great discussion. I'm very grateful to the panel members who are with us today, and to the audience members who joined us, and to those who will follow this on the recording. I would like to ask each panelist for their parting words of wisdom that they would like to share with the audience. And I will start with Veron.
Well, thank you very much for this opportunity to speak in this really great panel. I hope to keep in touch with everyone. Being the one that actually in Asia and representing Southeast Asia family offices, I would like to emphasize that this is just very much a beginning in Asia. Family office concept is just very, very new. We are learning and we are adjusting our own family office model here, adding the unique flavor and needs for Asian family at the same time, learning the best practice from the West. So being in Singapore, a very strategically located financial hub in the region, and with a very supportive government, that giving tax incentive for family office setup, it gives us the geopolitical advantage to attract more families from all over the world to set up their office here, really as a diversification of risk or simply an alternative base for capturing opportunities in this part of the world. So I really wish for the border to open and then the pandemic under control so that we can resume traveling. So hopefully for next year, Horace, I will be in US attending. Yeah.
Perfect. And Singapore is a beautiful country. We all look forward to visiting again. Georgie.
We'll be vaccinated very soon. Everyone, 100% of us.
I can't wait to go to Singapore. Yeah. So it's been such a pleasure to share the stage remotely with all of you, and definitely look forward to seeing you in person. I think, what Ibrahim said is very important for family offices to remember, is that responsibility of wealth and how crucial it has always been, and more now. First, because sustainability is actually your biggest engagement tool for across generations. And second, because we need all the capital possible coming to the table to work out the solutions of the future. And we are all riding on the shoulders of giants. And there is information, there are groups. And what I would encourage you is to collaborate, to try it out, the new ways, and to join others who have been, leading the charge and making sure that again, we go into the breakthrough that the world needs.
Perfect. And that collaboration you're asking for is exactly why Horasis exists. Thank you so much for being a part of it. Ibrahim.
Parting words. Not to be too controversial here, but I definitely hope we don't go back to our traveling days and actually take advantage of the fact that we can be so much more productive, lower our carbon footprint, meet once in a while for sure, and just like not go back to how we were before the world shut down and we had this like routine of being able to conduct our business and our personal life and have balance again. It was really a runaway train wreck before, and now we have a little bit of balance, and I hope we hold on to as much of that as we can. Mm-hmm. I do believe we should get together, from time to time, but I find it so much more productive to use these tools that are available to us, and I hope we keep them. There's so many advantages to it. One of them simply is one that somebody brought up, which is just our mental health, mm-hmm. and our physical health and our planet's health. So anyway, these are our parting words.
There we go. I'll drink to that triple health cocktail. Thank you, Ibrahim. Steve, parting words.
I think on the reset, it's taught us that we can lead. We have to live in an ecosystem, okay, not an ego system. And I think this is the big thing that's kind of coming up at that. I'm hearing things about collaboration and changing mindset in our family office to work together, because the synergies of our family offices working together will create more synergies and actually produce better results than just a family office working alone.
Fantastic. Well, we finished right on time. Thank you, everyone. It was great to work with all the panelists. Thank you for our audience participation, and hope to see you in a future session and a future meeting.